Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, April 14th. It is 6:27 as I'm starting the video. Let's take a quick let's do a quick recap of what happened yesterday. We had the breaking news of the J&J vaccine, literally a 1 in a million problem, but they saw fit to suspend its use until further proclamations can be made about whether they're going to use that again or not. I guess we've got plenty of supplies for Moderna and Pfizer, so we don't particularly need J&J to continue on with our vaccinations. But on a global basis, along with AstraZeneca's issues, we probably need the J&J and the AstraZeneca to get back on track so we can have larger worldwide supplies. We also had a hot inflation print early in the morning, 8:30 before the bell, but they sold that, right? They buy the rumors, sell the news, and yields were falling. And then there was the auction at 1 p.m. for the 30-year, and rates took a nosedive at that time, which was a real catalyst for afternoon trade on risk assets. When, you know, we've been talking about interest rate sensitive stocks, the financials, the bubble stocks, etc., in that rising rate environment. Well, obviously the opposite is also true. If rates plummet, that's going to be rocket fuel for technology. The bubble stocks, the high valuation stocks are going to do well in that environment, and we saw that yesterday afternoon. So today on tap, we've got the Coinbase IPO, which is driving a lot of interest and excitement in the NFT and crypto space. We've got 6 Fed speakers today, including Jerome Powell at noon at the Economic Club. I mean, with 6 Fed speakers, I expect them to all be on the same page. I don't expect any kind of news or mess ups. I think they got it all choreographed and are going to stay on script. We've got JP Morgan, Goldman, and Wells Fargo this morning here on earnings. We'll have to see what they have to say. I expect it's going to be positive reports across the board, with capital markets adding to a rising interest rate environment for these guys, and I think they all are going to have really good first quarters. Taking a look at the markets here, the indexes are flat across the board. Oil is up 1.7%, and we've got that inventory report at 10:30 this morning. And I did want to mention yesterday that with rates falling and inflation rising, that's a good environment for precious metals. And we saw that in gold and silver yesterday. So keep an eye on precious metals as we go forward today. All right, so let's go through the charts real quick. I want to spend just a moment on TLT. Here was the spike yesterday, if you can call it that, up about 0.75%. But taking out this 138 area, which I had very high volume over price bar here, as long as it stays above 138, I think rates have some running room. We've got the 50 up here near 141. That would be definitely an area where if it ever got up that far, I would be interested in putting on a short on TLT. I don't see rates just continuing to fall unless we just don't reopen, and I don't think that's going to be in the cards. And on the topic of reopening, you probably noticed yesterday the worst performers: airlines, all the reopening stocks, airlines, hotels, travel, all that stuff, materials, resource stocks. Get your shopping list ready, is what I want to tell you, because we've seen these vicious rotations several times. This rotation between reopening and stay at home. Yesterday was a stay at home day, right? Zoom, all the, like I said before, EV, bubble stocks, they all did moonshots on the falling rates and the J&J vaccine news. There's going to be a rotation back to reopening, and that's a dip you want to buy. So get your ducks in a row. Look for support levels on the charts of the names that you like, and be ready, because it's going to come fast. It's going to come really fast, because we are going to reopen. We are going to have a crack up boom in economic activity for the next 2 to 3 quarters. And I think the last couple weeks have been a temporary setback, and I think those are going to be stocks that you're going to want to buy again. And I think rates are going higher, and this fade in rates or the pop in TLT is something that I want to fade. I think regional banks and financials in general are gonna do well in this environment going forward, because I think rates are going up, and I think this whole thing over the last however many couple of weeks, this is a bear flag in my opinion, and we may get up to 141. That's fine, but we're not going back to 151. We're going the other way. So that's my opinion. The charts will lead the way, so keep an eye on it. SPY grinds higher. I've put another little support level here at 412. As long as we keep grinding higher, stay long, ratchet up your stops and your strikes going forward. I mean, we'll eventually get a pullback. We just haven't had it yet. There's a lot of green bars here, no red bars at all. So stay long. We're overbought, but as long as these intermediate support levels hold, I don't see any reason why they need to pull the rug. I mean, they eventually will, but got to stay with the trend as long as it's there. Here's that 412 level. I think any pullback into 412 you can buy with a stop just below, and then a level below that is 410.50. A lot of action in the Qs yesterday, as we talked about. The falling rates are going to juice technology more than any other sector. It was up 1.17%. I've scratched a line here at the highs, and we've got a little gap here down just under 338. I think, anything taking out the high from yesterday this morning is a buy. Within here, any pullback to the gap, I'd be a buyer there as well. The gap is pretty small. I've got it here. What is it? $1 wide down to this prior level here at 337. And that was our breakout. 337 was the prior high. So we got the breakout that we were looking for. And as long as we stay above 337 on the Qs, we are in blue sky territory. And new highs you got to buy. And I'm a firm believer in that. You don't want to be looking for shorts. You want to be looking for longs. in this environment. And if you got to pull back to the gap and this trend line, I think that would be a very objective place to try and get long with a stop just below. And if we came all the way back to all the way, $3 from 340 to 337, I think that's an objective level to buy, because of course you don't see it on this chart, but you've got support from the whole world, right? Everything up to 337 was support, and that should hold. IWM in the recent environment is going to lag with all the regional financials in there. Whenever you have falling rates and all the cyclicals and value stocks taking a hit, IWM is not going to do well. So we're churning inside this big triangle. We've got an intersection here of overhead resistance at 223 combined with downtrend resistance of the triangle here. I think if you got a price breakout here, that's something you can buy, but I would be skeptical, down here trying to get long on a strategic basis. Now on a tactical basis, that's totally different. Yesterday, we had a reach up to 223. They sold it hard and went all the way back down to touch the top of this gap. We had a touch here, and we spent some time here at it yesterday, and then they took it back up. So, if you got long against the gap, you're in good shape. That's a very objective place to get long. But if you're looking to stay long, for days and days and possibly weeks, you got to see this downtrend line taken out. Here's a zoomed in view, 30 minutes. Here was the sell-off, the reach up to 223 and the sell-off back to the gap. And then they brought it up, basically even, down 0.26%. And here's your downtrend resistance and 223. So if you're new here, I want to thank you for spending some time with me. I do this each and every morning. I'd like to think I give you some great levels to shoot against intraday. And for swing traders, great levels to shoot against for longer duration trades. So if you are enjoying the content, please hit the subscribe button and the alarm bell and you won't miss a beat. Longtime listeners, please hit the like button. That'll help me and let other prospective subscribers know that you appreciate the content. I would appreciate that. And as always, if you're new, you can check out the show notes for links to both the blog site and how to register for all my content that you'll get each and every time I publish, whether it be a trade idea, a market observation, an intraday video, or a recap. You'll get an email right to your inbox, so you won't miss a thing. So please do that. And also pass along a link to people in your trading circle. That will help me expand my reach, and it also may help them become a better trader. So looking at mega cap tech, FATMAAN names, Facebook had a soggy day yesterday, just kind of thrashed around. This is the 60-minute chart. We've got a pivot point right here at 310. And as we've been mentioning, the main breakout was from 305. So anything above 305 maintains its long. And if you got a back test to 305, I would be a buyer there since we're at all-time highs and have broken out. So that would be a back test of the breakout. And of course, what bulls don't want to see is 305 fail, because that would make all this look like a fake breakout, and that would be a very bearish technical event, because all these people would realize that they were wrong and most likely exit their position, which drives further downside. Apple, another nice day, just keeps working up against our trend line. We were able to take out this 134 level, which was key. There may be some little sticking points along the way, but the next major level is 137 on the upside. And I would stay long and continue to ratchet up your strikes and your stops. Keep booking those gains as we go forward every day or two. Don't let a lot of premium accumulate in your positions, especially if you're short-time traders. If you're longer term time frame and you're in it for the long haul, stay long, and your next objective is 137. And if it can clear 137, then that's a major level that'll open up a lot more upside in the stock. The star yesterday was Tesla. We had been watching this bull flag, or should say not really a bull flag, a consolidation area with this pressing up against this resistance level at between 700 and 710, and we noted the rising PPO and the rising RSI, and now we got this big impulsive breakout that has recaptured all the moving averages, which is bullish, and it has really opened up a lot of topside opportunity up into the 800 to possibly even retest the old high at 875. It may not go there in a straight line. It may come up and consolidate and do whatever it wants to do. But at this point, with that impulsive stick, that's usually an igniting candle when it's spent so much time below this resistance. That big impulsive candle shows the buying interest, and I expect higher prices. I want to zoom down to the 60-minute chart just to show you. Here was the original breakout from the flag. Spent some time pinned under 700 and then broke above, and then got through this 725 area, and that after that it was off to the races. We've got a gap here between 770 and 780 that needs to be negotiated, and then the next level I see is 800 as overhead resistance. I did see a lot of institutional big money order flow coming into Tesla. Some strikes that stood out were 810 and 820 for a week from Friday. So not this Friday's expiration, a week from now. So what is that? 10 days out. They're looking for 810 and 820 call strikes in pretty good numbers. So what we may see today is actually pre-market. I saw it was up about $10 or $15. May negotiate this gap here, but once it gets through the gap, probably going to go up to 800 fairly quickly. And I hope you guys were on this. I hope some of you guys participated in that. I thought we identified the levels really, really well. I sent out an advisory yesterday morning pretty early once 725 was crossed. And even at that point, on these moves, don't think, oh my God, I missed it. There's nothing I can do. Look ahead, because once you cross this 725 kind of last chance to reject it level, you still have $40 of upside towards the end of the day. And that's a great trade. So if you got in it on this breakout here or here or here, you're sitting in the catbird seat. So well done. If you're not in it and you see a pullback, put your Fibonacci retracements on it. Look for a pullback and a zone of support, or Up here at the gap, if you see a hesitation and it build a consolidation flag, that would be a place as well. And then you can get it on the break into the gap. Now, one thing I wanted to show you here is I did put a measured move. Here's the first impulsive move. Here's the consolidation. And here's the measured move breakout. So on a technical basis, measured move target is 800. So that kind of jives with the chart on a couple of different levels. So, anything can happen. A measured move isn't a promise. It's just a projection. So always keep that in mind when I give you those numbers, that that's what the charts say. Of course, buyers and sellers may have different ideas, so you always got to keep that in mind. Microsoft, not a dramatic day, 1%, but hey, it's grinding higher along this trend line. I've dropped in another little level here at 257. Keep ratcheting up. Keep ratcheting up. Stay long. There's nothing that tells me, some kind of imminent sell-off is, forthcoming. We're in blue sky territory, so there are no natural sellers. So the things that would worry me would be a yield spike. Of course, breakdowns of these levels. If you're a real short-term trader, you could get a pullback into 254 or even 250, but I would view those as, temporary setbacks and opportunities to buy because this has broken out now, and I think the original breakout level was like 244.50, 245, and that was right here. So, anything above that, the breakout is intact, and I would be positive. Amazon, kind of a soggy day yesterday. We didn't quite get the free 50 club. We did break out above 3,400 and got up here to 3,430 something, but then kind of gave it back. Came back at the end of the day to settle just on this opening gap here. So for today, anything north of 3,400, I think you got to be long. If it drops below 3,400, you're probably going to get a gap fill here down into 3,375. But here's the thing I want to really show you this morning so we can get the big picture on Amazon. Since last June, how many months has that been? Almost 10 months. Thrashing within a range of 2,900 to 3,400. And now we're at the top of the box, threatening to break out. And notice, no weekly closes above 3,400. We've had tails that go up, but no closes above 3,400. If we get a weekly close on Friday above 3,400, get this PPO bull cross working on a technical basis. As long as 3,400 holds, our technical target would be 3,900, right? $500 consolidation range, breakout, measured move is the width of the box. 3,900 would be the target. So 3,400 is a massively critical level. And even if, it's one of those things, if you've never traded Amazon, it would still be a number to pay attention, because that would be a very objective place to anchor your long. As long as 3,400 held, anchor your long and look for 3,900 or 4,000 going forward into 21. It's not going to get there in 5 minutes, but from a technical standpoint, look at this big consolidation, then a quick run up. So it stayed for over a year here in this, this was a $500 range as well. And then you went from 2,000 to 3,000 in the period of, looks like 3 months. So you put on $1,000 in 3 months. You could get the same thing here. You get $1,000 in 3 months. That's not a promise. I'm just saying that's what happened last time. Easier trading follows harder trading. So you want to be on top of that 3,400 if there's a breakout. Google, it has already broken out. We're in blue sky territory. Kind of a soggy day yesterday. Stay long. You've got a bull cross pending here on PPO, and RSI is holding above 50. I've got the critical levels marked. You know, if you get 2270 taken out, I think it takes the leg higher there. You want to see this 2230 hold on any kind of pullback, and definitely you want to see 2200 hold. You don't want to get back in this area. And, you know, if it did come back in this area, it's probably going to come down a lot further. But I'm not expecting that. I'm expecting higher prices out of Google. Netflix has been wrestling with this 552.50. We had a little breakout in the morning up to 560. They faded that pretty hard and brought it back to the pivot point at 552. I think you just stick with 552.50, and above that be long, below that be cautious. You know, and what we're looking for is a move up here to take out 560 and then 565 to keep the upward momentum going. Moving into some individual names, we had talked about NVDA over the last few days. Very much like Amazon and some of these other mega cap tech names, got the big breakout and we got follow through yesterday. So now we're in blue sky country with a $120 measured move, looking for 700. And so as long as this 610 area holds, that breakout will be intact. A lot of bullish flow yesterday supporting the move. I like NVIDIA higher. What would change my mind is I would be cautious if it lost 610, and I would actually go bearish if it lost, 585 and came back down into this box. That makes it definitely, you can't be long if it comes back below 585, and you may even want to get short, because as we've seen, fake breakouts back into the box mean the bottom of the box is the target. So that would change everything if this rolled over and came down below. But for now, looking for higher prices. Saw a lot of bullish order flow in Activision Blizzard. We're right here at this critical level at 98. Prices recaptured all the moving averages. I'd set an alarm right here at 98. I think you can get long on a break above and then look for 104. I would anticipate another run at the highs if it can break above this 98 level. Baba was in the news, settling with the Chinese government. We've looked at this chart before. Here was the gap up on that settlement. We had an inside day yesterday. I want you to focus on the 200 right here at 247. And this, value area here just above. I think if it takes out 247 and breaks back up into this prior range, I think it can find 270. And if tech in general is going to do well while these rates are being fairly docile. And if BABA can get on the right side of this chart and break above 247, 250, I think it's got a runway higher. Notice that we had a low here with a low in PPO and a low in RSI. We came back down to visit those lows, but look, positive divergence on momentum and positive divergence on RSI. Now we've got an RSI breakout, momentum is breaking higher, and price is challenging the 200. That's a bullish setup if price can get above the 200 and recapture all the EMAs. So I like BABA there if and when it breaks above 247. CHWY was another name that I saw yesterday. This was the rug pull on these high growth names. Found support here at the trend line. Now is moving higher. Very much like BABA. You want to see price move back into this prior value range above 89, where the 50 EMA lies. So if it can break above and recapture the 50 EMA at 89, I like this long to get back up into the value range, the upper value range, and then make a run towards 100 as kind of a first stop, which would be right in this area. So I like CHWY, but you got to break above. Don't front run it. Make sure that 89 or 90 gets taken out. Okay, no matter what I do, it always ends up to be 30 minutes, but hopefully you've seen a lot and received a lot of value in the video, and you've made some notes about the objective levels for today. Let's make those levels count with some good trading. Let's see how the big banks report today. That may bleed through to other financials and the regionals if they report blockbuster earnings and have a good outlook. So let's see how that goes. And probably going to be a lot of attention on Coinbase today as it opens supposedly at $100 billion in valuation or more. So have a good day of trading. This has been Chris Buss of Traders Profit Compass. Talk to you next time.